Dwelling insurance is actually one of two forms of insurance used to protect the places where people live. This coverage is similar to the property portion of the other type of insurance for residences, and that's homeowners insurance. But dwelling insurance is available in a separate policy form and shouldn't be confused with homeowners. Despite their similarities, they're distinctly different products. Homeowners coverage normally requires that at least one of the units in the residence be occupied by the named insured. It presumes the owner is the occupant and physically occupies the space at least 80% of the time. Additionally, homeowners policies include coverage for theft and liability without additional endorsements. These two factors are not the case with dwelling policies. Dwelling insurance doesn't require the property to be occupied by the owner, and they also don't automatically cover losses from theft or liability, although endorsements can add these coverages. Without additions or alterations, coverage provided by a dwelling policy is property coverage. The standard dwelling policy doesn't grant protections for any other types of losses, including liability losses. If they want, a property owner can purchase dwelling coverage for the house they live in, but in this case, the more extensive coverage afforded by a homeowner's insurance policy is likely preferable and possibly more economical. Generally speaking, dwelling coverage serves two main purposes: protecting the owner against loss or damages to structures on their property, and protecting the owner from losses of rental income that the owner might have earned from a property. Common use of dwelling insurance is to provide coverage for a structure that the owner rents to others. This is one of the reasons why dwelling policies do not provide coverage for theft. The rationale behind this is simple. Theft is not provided because the property is generally not owner-occupied. Anything stolen from the property is likely to be the property of a tenant, not the owner. Thus, the owner has minimal, if any, exposure to this risk. Generally speaking, from the perspective of an insurance company, properties that aren't occupied by the property owner present a higher risk of loss than owner-occupied properties. This is due to different maintenance priorities, less pride of ownership on the part of the tenants, and the fact that rental properties can have a high rate of vacancy due to tenant turnover. Dwelling insurance is a logical compromise for people who own residences that they don't live in regularly or at all. For example, people who own rentals need to protect those properties with insurance. However, the cost of full homeowners for each property can be very high. Dwelling coverage bridges this gap. It provides the insurance that the landlord needs to protect their investment. And by removing the liability and theft coverage that is less necessary, the landlord should be able to afford to insure all their properties. While homeowners insurance provides a greater degree of insurance than dwelling insurance, it can be more expensive and is not necessarily suitable for every situation. Dwelling coverage is the insurance option that meets the needs of people who need to protect the residences they own but don't need a full homeowners insurance policy.